I have a call to order for the Finance Committee, Wednesday, May 29. Can we have a roll call, please?
Mr. Lear.
Present.
Mr. Legess.
Present.
Mr. Washington.
Present.
Mr. Olthoff. Mr. Hess.
Present.
Mr. Byrne.
Present.
Miss Weber.
Present.
Mr. Payton.
Present.
Miss Parker. Mr. Kinzinger.
Present.
Mr. Zenz.
Present.
Miss Haas.
Present.
Mr. Swanson.
Present.
Ms. DuColo.
Present.
Mr. Dunnell. Mr. Wheeler. We have a quorum.
Thank you. I have no request for public comment. Are there any desire to do any public comment? Does anyone want to do any public comment? If not, we have no presentations. We'll move to approval of the minutes for April 24. Is there a motion to approve? Mr. Swanson, Mr. Burns seconds. Any discussion on approval of the minutes? Hearing none, all in favor say aye.
Aye.
Opposed, nay. The minutes are approved.
Aye.
We move to the Finance Department. Mr. McCarty. For our first item of business, we're going to go over the fiscal year 2018 Comprehensive Annual Financial Report. I believe you have some guests to speak to that also.
All of you received a draft copy via email, so we professionally like to let Smith Kelling Dykstra Nome go first and do the required communications, the closeout communications for the 2018 audit. So without further ado, I'll introduce Marcy Kohlberg and Carmen Huizinga from Smith Kelling Dykstra Nome to share with you their communications.
Good morning.
Good morning, Steve.
Good morning, everybody.
Good morning.
Today I handed out a packet of some highlights and some excerpts from the draft financial statement report, from the draft comprehensive annual financial report. If you do not have a copy of those, I believe Devlin has extra copies in the back, so you can raise your hand, or he can get you a copy of those. What's in front of you is first off, our opinion on the financial statements. So essentially, we've been hired to give you an opinion on your financial statements, on whether those financial statements are materially correct. And we did issue an unmodified opinion on all of the various opinion units in your governmental entity. So that basically means it's a clean opinion. So there's a second opinion report in that first set of documents. That is our report on internal control over, I gotta read it's a long title. It's our report on internal control over financial reporting and on compliance and other matters based on an audit performed in accordance with government auditing standards. You are required to have your audit performed in accordance with government auditing standards. Some smaller entities may not have to have that requirement, but you do. So if we find any deficiencies in internal controls over financial reporting that we're required to report, those would be found in this letter to you. We did have 2 findings, and the explanation of those findings is attached in that packet that you have. We've been in contact with the department heads, which those affect, and they have already implemented their corrective action plans or are currently implementing their corrective action plans on those. So if you have questions on those, feel free to call our office or those individual department heads or Steve's office or Mr. Wheeler. Any of us can answer questions about those. Within that same report, we also report on any compliance matters that we may have noted. We did not note any non-compliance that was required to be communicated to you. The next report in your packet has a heading on it called restriction on use. See last paragraph of this letter. These are our required communications to you as a board. Those are restricted. They are not to be shared with anybody else. So it's just a restriction on use for that report. So we didn't have anything in addition to most of the boilerplate language, but we are required to communicate to you any material audit adjustments that were posted throughout the audit, and if we had any difficulties with the audit. So those would be in that letter. And then finally, we issue a management recommendation letter. So these are things that we found throughout the audit, just in full transparency. Anything that we feel you could benefit from or feel are worth your attention and management's attention are reported in this letter. So any recommendations that we have would be found in there. We also perform a single audit in accordance with the uniform guidance. So your entity receives money that is passed through from federal agencies, and we're required to select certain grants to audit for compliance, and we selected the WIC grant at the health department and the workforce investment grant here at the county. And we look at the federal compliance requirements related to those. We had a couple minor compliance findings with the WIC program, and again, those are being handled by the health department, and they've been implementing their corrective action plans on those. I believe Mr. McCarty sent out an electronic copy of the draft financials. They are about 160 pages long, so it's a very long document. So I'm sure you haven't had a chance to read it cover to cover, but we're just going to go through some of the highlights of that. And as you all know, the county has definitely turned a corner, and you have, for the last 2 years, definitely been moving in the right direction. And I think that makes it a lot more pleasant for everybody to come to these meetings. So just a couple of indicators that you have been moving in that positive direction. We've seen significant increases in the fund balance in the general fund, the tort fund, and the pension funds since fiscal year 16. There was a $2 million increase in those combined funds in fiscal year 17 and almost $3.3 million increase in fiscal year 18. So combined in the 2 years, it's gone up $5.3 million. It appears the county has definitely made positive steps to be able to reduce the interfund borrowing. A large amount of the receipts into the county are for restricted purposes, and the general fund for the past several years has been borrowing these just to operate. The general fund owed $6.6 million to other funds as of November 30, 17. That amount was reduced to $4.3 million at 11/30 of 18. In the big packet of financials, if you want the details on which funds owe who, that's in note 12, footnote 12. We're also aware that the county has basically remained current on all outstanding payables for the last year. Previous to that, they'd been out 120 days, 90 days, some even longer than that. So that's another positive indicator. The county is still issuing tax anticipation warrants, but that has kind of stabilized. In FY17 and FY18, well, in February of 18 and February of 19, $2.5 million were issued each of those years. In the past, it was questionable whether the county would even be able to secure enough TAWs to get through your cash flow issues, but now it appears that the short-term financing will be available for the next few years as needed. Another positive indicator is that as of now, all outstanding union contracts have been settled. The reason this is important is because it allows the county to maintain budget control throughout the next couple fiscal years. It's a lot more predictable as to what your costs may be related to personnel when all of those contracts are settled. Another significant factor in FY18, well, and FY17, was the county's agreement with Will County regarding the juvenile detention center. This had a significant impact on increasing the general fund's position in both years, and it will continue to have a positive impact on the cash flows in the future. Since you are receiving a credit back for those basically bed rentals, that's not cash that has to go out the door in your operations. We're also aware that the inmate housing revenues continue to increase, both in the number of inmates that they are housing and an increase in the daily bed rate now in FY19. So that has significantly contributed to the positive upswing. All of that being said, the county should continue to diligently work to find sustainable solutions to reduce both the interfund borrowing and the use of the tax anticipation warrants, and most likely this will primarily be through control and reduction of expenditures. Most likely there's not a lot of extra additional revenue sources out there for the county, so expenditure reduction is probably your most likely way to accomplish this. In the annual financial report, there's a section called Management's Discussion and Analysis. It is a bit lengthy, but that is written by the finance department, and it basically explains the highlights of the financials. It explains the different sections of the report, and it's a little bit more in lay language rather than technical financial terms. So I would encourage you all to read through that. As far as the fund financial highlights, we went through a couple of those in the highlights of the positive direction the county's headed, but the general fund, if you exclude the tort and pension funds, so just the general fund by itself, reported excess revenues over expenses of $1.3 million in 2017 and then $2.5 million in 2018. These were the first years since 2011 that the fund balance increased in the general fund. So you've had 2 years in a row now after several years of decline. The highway fund is also a major fund in the audit report. They did have excess expenditures over revenues for the past 2 years, but the highway fund does have a healthy fund balance to cover any deficit spending that they've had. The remaining governmental funds, which there's about 50 of them, have also moved in a positive direction overall if you look at them all together. And one other highlight is that overall the cash and investment position has also increased in FY18 compared to FY17 for the governmental funds. In FY17 it was $13.6 million, and FY18 as of 11/30 it increased to $17.4 million. And this was all while reducing your vouchers and accounts payable by $800,000. So it wasn't because payables were sitting out there open. So the cash position did increase, so that's good news. Basically, the biggest new thing that you'll find in the financial statements this year that hasn't been in there in the past is some new reporting requirements and new calculations for other post-employment benefits. So those will be discussed by Marcy, and those were implemented under a new standard issued by the GASB.
I'm here mostly for moral support for Carmen, but I will cover this new footnote. Your other post-employment benefits that the county has, can you guys hear me? Am I good? Is your health insurance that is offered to IMRF retirees. IMRF requires you that if you have a health plan that once an IMRF retiree retires, they can stay in the health plan. It can be at their cost, but they are allowed to be in that plan. So you do have another post-employment benefit plan. This year there is new calculations on the way that future liability is calculated, and it did result in an additional $5.1 million liability that we had to add to the entity-wide. Carmen has been talking the funds. This would be an entity-wide adjustment only, which in your big packet is going to be the first two financial statements in the packet. So you will see that the liabilities went up 5.1 million. So your fund balance, or your net position at the end of last year's audit, we reported a $38.7 million net position in the governmental funds, or in the governmental activities. It was reduced to 33.6 because of that restatement. There is a lot of information in note 11 on that, and I mean pages. It talks about what the benefit is, who qualifies for the benefit. You actually do have a couple of different scenarios based on union contracts on what the county pays versus what the retiree pays. They said the retiree can be, IMRF says that the retiree can pay the whole amount of that benefit. Some of your union contracts are a little bit different than that, so that is detailed in there. It gives you, like I said, there's 6 or 7 pages of information on that as far as health costs and future trends and all of that. But an actuary does determine that liability, and that is what is new here. You have in the past recorded a liability for that benefit, but the calculation changed significantly. So like I said, there was the $5.1 million change in that calculation as of the end of 17 that runs through the net position. I'll let Carmen finish up here.
Thank you, Marcy. I did neglect to point out that I included in your packets a part from the statistical section of the CAFR called the Fund Balances of Governmental Funds for the last 10 fiscal years. So you can see there the general fund, the pension fund, the highway fund. This general fund on this report does combine the tort fund in with it. But it, yeah. So you can see, like in 2014, there was a negative fund balance of 3.6 million, then a negative 4.3 million, then a negative 4.2 million, and then we start to increase in 2017 and 18. So if you're a numbers person, this is a nice chart to show the trend. If you're a picture person, there's a nice graph in the MD&A that also shows that in picture representation. I'm going to focus a little bit on the entity-wide financial statements that Marcy referred to. So in the CAFR, the first 2 statements called Statement of Net Position and Statement of Activities are a high-level overview of the county. So it's all funds combined together, governmental activities and then business-type activities. Your governmental activities are all your governmental funds. The business type activities is only the animal control and the 911 ETSB fund. But what's different on the entity-wide is it has a different measurement focus. So it looks at all liabilities, all receivables that are, and all capital assets, all long-term debt, everything that's out into the future, as much as can be measured and as much as is known, whereas the fund financial statements are really focused on a current focus where it's just looking maybe at the next 60 days or the next year. So you don't record any revenues that you receive 60 days past the prior fiscal year end because they're really not available to be used to fund current operations for that year. But on entity-wide, it encompasses everything. The other difference there is it shows everything by function on the statement of activities. So you have your basic functions of general government, public safety, court services, health and welfare, transportation, and on these financials, all expenditures have been allocated to their proper functions. So a big difference is on the general fund budget, for instance, you may have the various departments, but then you have a utilities department and you have an insurance department and you have a pension fund. Well, these departments and funds cover all of the functions. And on the entity-wide, we're taking those and, well, the finance department gives us that information, but in the financial statements, all of those expenditures are then allocated back to their functions. So on that statement, if you're looking at the transportation function or the court services or the public safety function, all the pension costs, all of the depreciation, all of the insurance costs, utility costs are all allocated back. So there's a graph in color in your packet called net expenses by function. And what this shows is a trend for the past 5 years. And one thing you can see clearly on that is in the public safety fund. Well, first I'll go back. Net expenses are all of the revenues that can be allocated directly to a function, less their expenses. So really, you're almost always going to have more expenses than charges for services, because the government really can't recoup their services without taxing somebody. So net expenses are the amount that end up having to be funded by taxes and other general revenues. So if you look at the public safety graph, you can see kind of that direct result of the additional charges for services that they've received for the ICE revenues, the ICE inmate housing. So their net expenses, the amount that needs to be charged by or funded by taxes and general revenues, has decreased by a couple $1 million in the last couple of years. So that frees up general revenues then to fund other governmental functions. And just to note, there are expenditures in those entity-wide financials that are also not recorded on the fund financials. Some of those, like Marcy mentioned, the OPEB, there's pension costs that are all out of actuarial estimates and things like that. So I just thought that was an interesting graph, and it gives you a good picture of what has been happening the last 5 years and what revenue sources are offsetting to put you down at what needs to be funded by your general revenues. So those were basically the financial highlights that I wanted to point out. We also perform a separate audit on the circuit clerk's office that's required by the Office of the Administrative Courts in the state of Illinois. There's some compliance testing that we do there, and then some financial information that's also included in that report. Any of those internal control findings have already been discussed with the circuit clerk, and I don't have the final process, but it is complete and finished. The final report will actually be done most likely today or early tomorrow, and then will get filed with the proper regulatory bodies by the 31st. That's when it's required to be finalized. Then the county will have to fill out the annual financial report on the comptroller's website, and the data collection form for the single audit will be submitted to the Federal Audit Clearinghouse. So those are kind of the last pieces for the audit that will be completed. I already mentioned that, didn't I? The management recommendation letter? Yes, I did at the beginning. I'm pretty sure that it was in their packet. Okay. So does anybody have any specific questions?
Number 10.
Yeah.
Mr. Kinzer.
Thank you, Mr. Chairman. Quick question, just so I understand the graph you presented under court services. Next year, because of the state of Illinois reducing income on that side, would I expect to see that line or that bar graph go up? Am I reading the chart correctly?
Yes.
Okay.
Expenses stay the same.
Okay. So that line, we ordinarily, I mean, we automatically expect that line to be up next year. Okay, I understand the graph.
The only thing that would be, that may make it go down is this IMRF pension and OPEB. Those numbers vary so greatly from year to year, and they're allocated among all the functions, that in and of itself could cause a decrease. It could cause a big increase all the way across the board. It just depends on performance by the investments at the IMRF, with the IMRF fund, and what projections of medical costs, et cetera, are. And those numbers can leap $1 million, $2 million. It would be allocated. So yes, if everything else stayed the same and the income is going down, that bar is going to go up.
Thank you.
Okay.
I can point out one other thing on that graph specifically about court services. It looks like that amount increased significantly in FY18, part of that was a little bit of an anomaly due to the sale of the detention center. On the financial statements in 2018, basically the proceeds from that sale are down in general revenues and not up in court services, even though they relate to court services. So, and in the prior year, the credit that you got back for those services were included in court services revenue. So there was a little bit of an anomaly there to show that court services jumped, but in reality, it kind of didn't, but it looks a little strange on the graph.
Mr. Wheeler?
Thank you. So accordingly, you know, the general government is lower than it would be on this graph because of that million that went into general government. Is that-
Actually, no, the primary reason that went down is because of the pension allocations and the crazy estimated actuarial liabilities. So that $1 million that came into the general fund was actually shown down in general revenues, not
Okay.
in a direct reduction
Okay.
to general government expense.
Are there any other questions? If not, we need to move this financial report on to the full board. Mr. Altoff, motion. Mr. Payton, a second. Any discussions on moving the report to the full board? Hearing none, all in favor say aye. Aye. Opposed, nay. Motion carries. Thank you very
All
much.
right, well, I want to thank everybody for the opportunity to do your audit, and especially a big thank you to all the departments who we bother for the last few months for their time and effort to make the audit come together and happen. So we do appreciate that. Thank you.
I'm sorry.
Thank you, Mr. Chairman. Real quick, thank you for this very high-level information. This is really an outstanding report. Just curious, how long was the entire process for you to complete this?
He asked how long that entire process is to complete it. We began discussions to get engaged to do the audit last October.
Last October.
And then we start on our testing procedures in January and February, and then we get final numbers in mid-February, and then perform the field work in March and April, and finalize the report the last 3 weeks or so.
Okay.
Okay.
Yeah, that definitely shows. Thank you very much for your
Thank
work.
you.
Anything else? No? Thank you.
Thank you.
We'll move to the 2019 update. Mr. McCarty?
Excuse me. Yeah, before we get into FY19, I also would like to thank the various departments. They provide us, they take time out to provide update information in the statistical section in the back of the audit. So it's a lot of interesting information. So I also encourage everyone to read that information. So basically what we wanted to do today is kind of piggyback on the good news in the FY18 CAFR report that we just went over, and add the current trend of FY19 to that picture, and so that everyone can see how the trend is continuing as the trends that we see right now in FY19. So we put some information in your packet, as well as on the screen for everyone to look at. And it is with great pleasure to be able to share with you first the graph of the general fund. So this is general fund by itself, reported by itself. And for the first time since 2012, our trend right now is that the general fund will be positive here in just a few months in 2019. So the positive trend continues. So I've been looking forward to this meeting for a all week long, to be able to say those words. It's been a long time. So the information in your packet and the graph, you know, obviously tells a big story, and then the fund balance totals. Kelly, if you wouldn't mind, go to the next screen. The fund balance totals also share the trend for the three major funds that we have been discussing. So in the 2018 report, and what was referred to, you can see that all three, for the first time in 4 years, all became positive in 2018 as reported in the 2018 CAFR. And then in 2019, the general fund will also be positive, sitting on its own. And then the combined number there of 3.5 million in total. So those are the estimated year-end fund balances as of right now, with the trend that we see. And wrapping that up, some very important notes. Carmen mentioned the trend in the last 2 years. If we take the 3 years, including the trend of 2019 into the picture, it's now a 7.5 million change in fund balance between the general fund, tort, and pension in 3 years, including FY19 and the trend that we're on. That's just mind-boggling to be able to say $7.5 million in 3 years change. So the ripple effect of that, we're going to get into a little bit more detail to show you some of that with our cash flow update. But the borrowing has been, it continues to go down, less borrowing in total dollars than the length of time over here, as we're all aware of. And then the significant change in the outstanding accounts payable. Many of you recall the struggle we had with that, being 130 plus days out, and now we're within 30 to 45 days consistent as we talk today. And then brand new news as the current trend continues, we will not be needing any early property tax distribution in 2019 for the current year. We are able to continue as we are, and then we'll, as I said, we'll discuss what we can possibly do with that money. The early distribution in the past has been used to pay down our as the accounts payable grew through April into May and early June. That early distribution was used to pay down the accounts payable, the outstanding accounts payable. And then we continued on with the other distributions. Now that we're not receiving that, the distributions are going to be larger under normal process. So we'll discuss some other things that we can do, with the money that was used to pay down the accounts payable in the past from the distribution. So that's a quick highlight, but a very important one to be able to share with the committee, and for those that have been around all these years and lived through 2013 through the current date. All of you really can understand, how important and how happy, we all can feel about this information. But it is great news if we say we're positive, but we also, if we go back to the graph one more time, Kelly, if you don't mind. I left on the 2005 through 2008 years, and I left them on specifically as a reminder. It's great news and a great feeling to be able to, pause at this moment and have a good feeling to be out of the hole. But we also have to keep in mind that, a $685,000 fund balance is not a great financial position at the same time. It's not a perfect position to be in. We still have a long way to go. We still have goals to reach in the general fund, but we're obviously well on our way, and it's all good news. But it's just a reminder that we still have a ways to go as well. So I just wanted to remind everybody of that as well. And if there's any questions before we move on into the other information.
Mr. Byrne.
Thank you, Mr. Chairman. More of a comment than a question. Steve, you look a lot younger than you did a few years ago.
Yeah, can you age backwards? I know
Yeah.
I aged forward quickly, but age
Just
backwards, I think.
Having been on going back, like you said, the last few years and being a member of the Group of Five, and we were talking just the other day about how we anticipated 10, 15 years before we even saw anything like this. So it's a credit to everybody involved from then till now. Department heads, departments, and employees, and all over the county to see where we're at. We're not out of the woods yet, but it just speaks volumes. If you want to go back, glance over that Group of Five report and see where we were at and some of the recommendations, it was pretty dire. So this is pretty amazing.
Mr. Wheeler?
Kind of a question. I sorry if I'm gonna put you on the spot, Steve, but I look at these numbers and you talked about, you know, us not needing to use a early distribution to pay off, you know, pay down our payables. And I know that it isn't our plan. We're gonna be getting, squared away with the highway department over the next couple of years, cause we know we have to pay down that interfund borrowing. But that's part of this model that he's looking at. I see an opportunity, and I don't know if it's just forest through the trees and if it's legitimate or not, but is there a possibility or even a probability that, taking into account, we don't really know what the circuit clerk is gonna mean as far as the reduction in fees. You know, it's about $680,000 roughly. If it is 30% of that goes away, has to be paid out of the general fund per year. So we'll have a half a year of that this year to be able to figure out, and of that 680, maybe 75% is the circuit clerk's budget. Could we maybe not need a tax anticipation warrant? Is that a possibility?
Actually, looking down the road, I believe for sure we'll be able to go down in the TAWs, and it's actually for the first time starting to, that thought has come to my mind about potentially not doing a TAW next year, but we still have a lot of information to process. You know, we're looking down the road, but we're getting to that picture a lot quicker than, you know, than what we expected as well. So there is a outside possibility of for sure lowering it and possibly not having a TAW next year for cash flow purposes. That's a tremendous thing to be able to even start to contemplate and have that possibility to look forward to. So it looked like it was going to be 3 or 4 years out, and it's looking, you know, as things are going, if hopefully we can keep, you know, the trend going and be able to do that. So as well as pay back the highway funds as well. So.
It's amazing. All right, thank you.
If there's nothing more on that, we'll move forward.
Yeah, the next section, the packet is our regular monthly updates for the major tax funds and the bed rental program. The one that really jumped off this month, bring your attention to, is the income tax number. I believe it's the largest, at least through 2011 on this sheet. Very surprising. But that money is in the bank, $576,000 distribution in 1 month. So that was a nice surprise. Unless anyone has any questions, we won't spend a lot of time on these since they're our regular updates.
In regard to the income tax jump, was this not something that was reported in the media in terms of state revenue also? Because I think our income tax is tied to state revenue, right?
Yes, yeah, there were some reports. What I heard that the governor was changing some of what they were doing for their pension and stuff due to income tax, and that came out before, so I was a little curious to see what was going to take place, and then this large amount showed up within a week or so of that information. So we'll see how that trends out here the rest of the year. The use tax is also coming in. I'm sorry, well, use tax is, but the PPRT, the personal property replacement tax, is also one that is coming in higher than, trending higher as far as the year than what we expected it to, and the information, you know, that we had when we budgeted. So we'll see how that one continues to trend right now. So that's all I had. Now someone has a specific question on that.
Any questions on the financial reports? We'll move to cash flow then.
Yes, next we'll move to cash flow. We'll be on the FY 2019 cash flow analysis. There's also include FY 18. Just if, you know, for retrospect and trend change, if anyone's interested in that. But you can see in under May of 19 estimated in June, under the inflows of the third line down, the property tax distribution, we had $2 million sitting there previously, if you recall. We have now taken that out. We expect the first distribution, I should say, first distribution sometime early July. We also have our TAW payback, that the first one is in July, then the other one in September. So we're showing through the first couple of distributions here. And also then under outflows, a highway payback, the first year of a 3-year plan to pay highway back. So basically what I did is up the property tax distribution. So move the 2 million over to July roughly. These are still estimates. And as you can see, if you look down at our estimated ending cash balance, the last line, my thought is for this year, as we are crossing this new bridge here, looking at these possibilities, is to pay down the TAW early and save approximately $15,000 to $18,000 of interest, because we didn't need the early distribution to pay outstanding bills, so we'll pay down and save money on interest. So I did not show that yet in this analysis, but in showing, in the flow of things, you can see that, we with estimated 7.8 roughly, $1 million in the bank as of July, that we could easily pay off the remaining, $1.4 million of the TAW listed there at the top row of the outflow. So I just wanted to connect the dots, if you will, and the thought process, and it all, everything relies on that bottom line of flow, cash flow, and what we can do. So I've got this out another 3 years as an estimate, this model, and and that's where I'm starting to plug in moving forward, and looking at what next spring may look like to get through, and what dollar amount or not that we may or may not need for the TAW for next year. So so that's kind of an initial thought as we're progressing here, to save money instead of spending the interest rate. And and the reason we had to stretch it out originally when we went through the extreme cash flow situation is because we had to use the earliest parts of the distribution to pay off our outstanding accounts payable. We had to stretch the TAW out to the 2 distributions in July and September, the main distributions, so we know that the TAW was used to get us through the December through May area, so now without having to pay down the accounts payable, we should be able to pay that off early. So that's something that we're that I'm contemplating, that we'll take a look at as we cross over here in the next few weeks here, and should be able to talk more about it next month for sure. So it's a lot of information. We're covering a lot of ground today, I know. But is there any questions? Anybody have any questions at this point? And if you think of some other questions, feel free to contact me. Down if tomorrow or this afternoon, if something comes next week, I'll be happy to discuss it with you.
Mr. Hess.
Thanks, Chairman. Steve, do you think we should go ahead and be prepared to get the tax anticipation warrant? And if we don't need it, have everything in advance and ready to go?
Yeah, we'll still prepare. The preparation is to line those up, is to get the next tax levy in place. We usually do that around September, October area, and then that's in place, and then that's the next tax levy would be, if we were to take the TAW, that's what the lien goes on as the next each levy. So the process will be, it'll be in place if we need it, and everything will be in place as we watch, the flow heading into that time. So, and we have, unlike previous, we have a lot of banks now, multiple banks interested in doing business with us. So, but we don't want to spend interest if we don't need to, but we're getting to that. We're getting into that window of possibility. That's the important thing, and that's the exciting thing to think about and to be able to discuss. So yeah, going from not working no other banks other than the 2 local banks wanting to do business and getting enough just to survive to to be able to say that we may not need it is a huge. So So that's what I wanted to share with the committee, and how, you know, how it's progressing down to the cash balance, as well as the plan, you know, with highway funds, as the interfund borrowing, you know, we'll still have interfund borrowing for a few years yet, even if we stop the TAW, but that's not as expensive for us as the TAW, so.
Mr. Chess?
Steve, how soon do we hear from Moody's after the audit is approved? Because I know this has to have an effect on our rating, I'm sure.
Yeah, we had a short conversation with them after the FY17. It's usually August area that they have us on their radar screen. So I'm not aware of that will change at this point. It'd possibly be around August. But they kind of take, from what I heard, and they seem to be taking the approach with us, is they're quick to drop and they are slow to raise. And,
Yeah.
you know, so they kind of took a wait and see kind of a thing with they liked the FY17 report. They were waiting for FY18, you know what I mean? And so I believe that we'll start to see movement at this point, but I'm not sure how fast, you know, and how much that will potentially change. So,
Are there any questions here? If not, we'll move forward to repayment of the Workforce Investment Act funds.
yeah, attached is a letter that we received, Chairman Wheeler received from the Illinois Department of Commerce and Economic Opportunity. Basically, in short, the federal agency is now requesting the Department of Labor that oversees the workforce activity, actually is the grantor of the workforce activity. Then the state DCO is the state's application of that, and then we are part of that as the 3-county WIA board is now requesting repayment of the stolen funds that took place in 2014, that many of you are aware of. This describes that, you know, that the feds believe that that all means of which to recoup that money from the individual is potentially passed, and since the county is the named grant recipient, it ultimately ends up responsible for this. I do want to explain the last paragraph of the $5,374. Part of the federal funds at that time were left over, and then they were reawarded into a specific thing to the workforce board, and part of those funds also were stolen by the individual. The workforce board has no other funding source other than federal grant money, so we cannot use current federal grant money that they administer to pay back something like this. So the county is also responsible for that $5,374. So the total is $33,302. And Chairman Wheeler wanted to make sure it came before the committee so we can answer any questions and, you know, make sure the board was aware, you know, of this, and now at the point of having to write a check back. So we wanted to bring it for the acknowledgement and approval.
Mr. Byrne.
Thank you, Mr. Chairman. I have a couple questions. For one, I know it's 5 years ago.
Could we get a motion on this first? A motion to approve payment by Mr. Jess, second by Mr. Hess. All right, Mr. Byrne.
Thank you, Mr. Chairman. I realize it's 5 years old, but have there been checks put in place to keep this from happening again? And have the people who were overseeing this department been talked to, or and who was overseeing this? How did this get caught? I mean, I guess that's relevant questions, so it doesn't happen again, and we find out what happened. And
yes, the workforce board has this was a workforce board employee, and they have put in their fiscal policy and procedure manual additional checks and balances, so that there needs to be multiple signatures on checks, and so that one person, and at this particular time, this one person was doing deposits, writing checks. There was no segregation of duty, and that's where they started, you know, playing around and writing checks to themselves, basically.
So the person who was overseeing this enabled this person to just write checks without checking themselves?
With the procedures that were in place, that was able to happen. So they've added those procedures to do everything possible to eliminate, so to have the check and balance in place.
Mr. Jess?
Was the total amount that she embezzled $27,000?
The total was $33,302 at the very last paragraph.
Well,
the first
doesn't
page.
Grundy and Livingston have to pay anything back, or are we footing the whole bill? Because
No.
we were the pass-through agency, we gotta pay the whole
Right, the
bill?
county is a fiscal agent and the named.
It's a pretty
for
good
the
deal.
three-
She steals the money, we gotta pay it back,
Yeah.
she goes to jail for a couple of years, that's not bad. Not bad. Who said crime don't pay?
Mr. Kinzinger?
Yes. Was there any county insurance for theft on responsible, at that time, for responsible people?
Right, we checked into that, and the response that we got back from insurance was no.
Mr. Wheeler?
Thank you. Yeah, it's important to remember that these were not county employees. These are workforce board, or county employee, it was a workforce board employee. So that might be part of the insurance question. They can't be covered by our liability insurance, but
There is insurance now, though.
there is insurance now, yeah,
but
on that kind of
at
stuff.
this moment in time, there was
Yeah,
not.
there wasn't. And to speaking to Mr. Burns' point, there was a rather exhaustive series in the newspaper written by a very talented reporter that was explained this whole scheme that this employee had, and it was quite elaborate. She was good in a bad way. So they've since changed their procedures, like you said, signatures on checks, other people checking them. Not the same person is doing the bank reconciliation that's writing the checks. So they have fixed their problem that happened, 6-8 years ago by now. But it is unfortunate. We do have to pay it back because we're the grantee. We're the ones who received the grant. So.
Any other questions, comments? This is spending money, so a roll call, please.
Mr. Lear?
Aye.
Mr. Lejes? Mr. Washington?
Aye.
Mr. Oltov? Mr. Hess? Mr. Byrne?
Aye.
Ms. Weber? Mr. Payton? Mr. Kinzinger? Mr. Zenz? Ms. Hess? Mr. Swanson? Ms. Zucolo? Mr. Dennell? Mr. Wheeler? Motion carries.
I think that covers the items, or are you gonna take the rural transportation?
Yeah, other than FYI, I'm not sure if there's any other communication about this.
All right, Mr. Chairman.
There is I guess, a reason why we wanted finance to see this, because this is just a quarterly update on the finances of the transportation program. If it was something that was just for, about ridership and things like that, that would pertain to the PZA committee, but I thought that this committee should at least just see the report, and I believe it's part of, IDOT has mandating that we're just aware. We don't have to vote on anything. They just want to make sure quarterly that this committee sees it. So
Okay.
instead of PZA getting it, I thought that the finance committee should see it. And if there are specific questions, anybody can reach out to Ben in planning to get those answers.
All right. So you have that information, and to go to, it's Ben Wilson?
Yes, Ben Wilson.
Ben Wilson. Go to Ben Wilson if you have any questions. Are there any at this point? If not, we'd move to claims recommended, or not recommended for approval. I think there's 2 items in here. Is that correct, Mr. Chairman?
Yeah, there's two claims that come to our attention for the committee's review. One to Christensen Auto, and a situation of sales tax. I believe the Sheriff's Department is working on taking the sales tax off at this point. I don't know if there was, Sheriff asked me to have this on the committee as well here.
What is the recommendation for the committee to consider then?
Yeah, I believe it's to pay it without the tax at this point. I'm not sure
All
if
right.
the Sheriff had anything else to add.
a recommendation to pay with, out tax in terms of the, payment form in terms of Christensen Auto.
So the dollar amount would be
Mr. Wheeler?
$50,000.
Well, I would make the motion to short pay the invoice and have the, you know, so they get the principal money, but and, you know, the question is, well, go ahead and get a second if that's where we're going first. I have a question.
All right, there's a motion. Mr. Payton seconds. Is there any discussion here? We got it set already.
I have a question. Why did this conversation have to come here instead of happening between the auditor's office and the sheriff's office? Why did we have to have the, frankly, substantial cost of having this come before this committee for $1.75 or whatever in tax? I don't quite understand what happened, why it had to come here instead of this being resolved the way it has been for 15 years.
We'd have to ask the auditor. I don't have an answer.
Is the sheriff here?
I
No?
don't
Oh,
see him.
there he
Oh,
is.
yes, he
Couldn't
is.
see him. I couldn't see him.
Did his office receive any communications from the auditor's office about this?
Did the sheriff receive any communication on this? No, the sheriff indicated he did not.
All right.
All right, we have a motion to approve this claim without the tax. All in favor, say, it's a expenditure.
Yeah.
Is it- We
We've
have
already
a
got
motion.
roll call. Yeah.
It's a expenditure, so we do need a roll call. Roll call, please.
Mr. Lear? Mr. Lejes? Mr. Washington?
Aye.
Mr. Olthoff? Mr. Hess? Mr. Byrne?
Aye.
Ms. Weber? Mr. Payton? Mr. Kinzinger? Mr. Zenz? Ms. Haas? Mr. Swanson? Ms. DeColo? Mr. Dennell? Mr. Wheeler?
Aye.
Motion carries.
Okay. And then,
The second one, I believe, per the note, it's a Chase credit card activity, and per the note, the bottom looks like Auditor Lee was referring this that it did not come to the Finance Committee, so it was appropriate to do so. So we're bringing it before the Finance Committee as well. I believe some of his activity he chooses to bring before the committee. So this is to do that per the note at the bottom.
all right, is there a motion to approve this claim? Mr. Kissinger? Motion to approve. Ms. Weber seconds. Any discussion? It's an expenditure. So we will need a roll call vote.
Mr. Lear?
Aye.
Mr. Lejes? Mr. Washington?
Aye.
Mr. Olthoff? Mr. Hess? Mr. Byrne?
Aye.
Ms. Weber? Mr. Payton? Mr. Kinzinger? Mr. Zenz? Ms. Haas? Mr. Swanson? Ms. DeColo? Mr. Dennell? Mr. Wheeler?
Aye.
Motion carries.
Are there any other claims recommended or not?
I don't have anything else.
All right.
If there's
I
anything
don't
else,
think there's anything in the packet that I see.
Chairman.
So
Mr. Chairman,
finish up. Is there anything for the
Mr.
finance
Washington has.
department? Mr. Washington?
I have to leave early for a doctor's appointment. I just wanted to let you know.
All right, you're excused then.
Thank you.
Mr. Johnson, did you?
No, is he gonna turn off the camera?
Okay, so we'll need the camera turned off on that then. Pause for a moment here. And recess.
Now we gotta pay the Actors Union for Jason's appearance in today's video. Your royalties. Thank you, sir.
All right, I think we're back. we'll go now, if there are no questions, Mr. McCarty will go to the treasurer's office. Mr. Apicano? You have a report. Is there a motion to combine and approve? Mr. Toff, second. Ms. Haas? Any questions on the report? Hearing no questions or no discussion, all in favor of approving, say aye. Aye. Opposed, nay. Motion carries.
Good morning.
You probably can notice the report has changed a little bit. I think especially during this time of collection, what I wanted to do, and I had spoken, I think one of the ideas came from Mr. Kinzinger, just gives a little bit more information about where the money's coming in from during collection. Obviously, we're running a month behind on that, so you'll see it pop. Second thing I wanted to talk about was collection is in full force. The final due date is on the 20th of June. We pushed that back a week, so because the bills took a little bit longer to get out than we anticipated. So first distribution will be on July 19th. It seems this year, just anecdotally, that we're taking a lot more mail payments, and a lot more online payments, and a lot more early payments. Maybe that's a function of the economy, that people are paying earlier than they have in the past. I suspect we'll still have our June 19th and June 20th dates will be full. I guess the third thing I have, I know it's been in the paper, and I wanted to clarify because it seems like it's been a moving target with the CVB and how that money is collected. It's collected through my office, the occupancy tax, and historically that money through our intergovernmental agreement goes from my office to the CVB. I received an opinion about a week and a half ago from the state's attorney that asked me to escrow that money. That opinion has since been superseded by a new opinion from the state's attorney's office that asked me to go ahead and pass that money through to the CVB as they were going to escrow it, and because that's what the intergovernmental agreement said. So today, as of today, the money is flowing to the CVB as it always has, and my understanding is that they are going to escrow it themselves. And my operation obviously is just a ministerial operation. I collect it and send it out. So we had held back some money that we were going to escrow, and we now have released those funds to the CVB, and we'll continue to operate as usual from here on out unless we hear differently. So I just want to clear up that confusion. It's sort of gone back and forth a few times. I think that's it. I think that's all I have. If there's any questions, I would be willing to take them.
Seeing no questions, thank you very much. Appreciate your report.
Actually, I did want to say one last thing. Congratulations to everybody on getting the finances back to where they are. And I know we have more work to do, but it does feel good. And it's, if for those of you who don't have to see Steve on a daily basis, he really is more pleasant now. So, thank you.
The sheriff's office, Sheriff Downey.
Good morning. As Nick ended, I would also like to say and give credit to Chairman Wheeler with what has been done, also the board, the veteran members who've gone through the bad times, although, as Steve said, we're not out of the woods by any stretch, but we are certainly headed in the right direction, and I think that's a credit to both the veteran board members, the Chairman Wheeler, the new board members who have come on, Steve with the finance committee, and our department heads. I think everybody has continued to pull together since this started, and we are seeing some positive things, which is good for everybody. So I would also like to give credit to Mr. Byrne. One of the things that I think people don't realize when you're talking about taxes and real estate taxes is that everybody blames the county for their taxes. And Mr. Byrne put his real estate taxes out on Facebook, and after laughing at him because he had to pay so much money, if you look at, you know, who gets paid what, very minimal dollars from everybody's real estate tax bill actually comes to the county. And I think it's so easy to just say, oh, the county's getting all this money for real estate taxes. My taxes are X amount of money, and the county gets all that money. And no, we don't. And I think that was a credit to you for putting that out there and bearing your soul on Facebook. So some things you do see on the internet are true. So. So a couple things in our monthly update, and some of these things I reported to the Criminal Justice Committee. Our local numbers continue to stay up, and because of that, we did return the inmates that we were housing for Cook County. We did return them back to Cook County. The total, I think, when we returned them all was, I think, 13. So it wasn't a huge hit, but nonetheless, we did return those to Cook County. Our relationship with Cook County is still good. They have been great to work with, and I can remember all the way back to 2006 when we first started housing for Cook County. The biggest question because of Cook County was, are we going to get paid? And they paid virtually every 30 to 60 days. I mean, they were spot on. We never had to, we had more problems when the government shut down getting our money than we did from Cook County. So a credit to them. Or like I said, our relationship is still good. And, you know, if we ever need to do business with them again, I'm sure that we'll be able to on either side. So one other thing, and Mr. Olthoff asked this in the Criminal Justice Committee meeting about criminal offenses with our ICE detainees. And I do have, some of you may have seen the article about criminal offenses, and of course, regardless of the information we provide, there's still people out there that say, well, ICE classifies crimes as different, and you know, there's always some excuse. But for May, as we've been tracking this since May 1st, for the detainees that we get back from Chicago and the Illinois Department of Corrections, as of yesterday, our number was 82% of those that we've received back have criminal offenses, and 18% are non-criminal or illegal entry. But remember the one thing about illegal entry, if you've entered our country illegally more than once, you're automatically going back. So it's not, and that's not something that we made up, that's federal law, for as much as people want to follow it. So anyway, questions on that? Second thing on our agenda is our radio upgrades. As you know, it never fails historically as we talk about finances being in better shape. The sheriff always gets up here and asks for more money. So as we have said to you before, we have started, there is going to be a radio upgrade that is going on throughout our county. We are switching over from what we have right now to a digital system, and that will benefit us a number of ways, probably most importantly with our communication throughout the state. We're going to what's called STARCOM, which is what the Illinois State Police use, and the benefit of STARCOM is we could literally have a car down in Cairo, Illinois, and be able to talk back to our dispatch center, which we can't do now. We lose communication a couple miles outside of our county right now. That's certainly a benefit. The downside of it is there's certainly a cost for new equipment. It looks like you guys received the information from Kelly yesterday regarding the payment. And one of the things that we did and one of the things we talked about was combining, at least countywide, with our department heads who utilize both mobile and portable radios, which includes the sheriff's office, the probation office, the coroner's office, and animal control. And rather than each of us all coming to you separately and say, hey, we need to finance this amount of radios, we put them all together for you so that it's just one number and we know what, you know, everybody wants, we know what everybody's ordering, and the numbers you see in front of you. We do have some information from Motorola as well. Yeah. You know, the 4 options that they gave us, each of them are broken down to 5 and 7 years. And option 1 is to wait to make the first payment after the first year. And that ends up costing us about $6,000 as opposed to making the first payment upon signing of the contract. That saves us about $6,000. The number, and the chairman and I have talked about this, it's going to be contingent upon whether we want to go 5 or 7 years. And that is certainly up to this committee based on the numbers that you see in front of you.
Mr. Altoff.
Thank you, Chairman. With the update of equipment all the time, isn't it more reasonable to do 5 years than 7, saying that radios might be out of date in 7 years?
I can't imagine that, yeah, I know, we laugh, that 7 years we would be out of date. These radios that we have now, I'm trying to think, we were still down in the old building. I want to say it was 99 when we, I mean, these are 20-year-old radios that we started with. So it does last a while. But, you know, if we want to get this taken care of in 5 years as opposed to 7, that's certainly up to you guys.
What would your recommendation be?
You're looking at about $29,000 difference a year. So if you spread that out over the 5 years, if the 29,000 times 5 is about 140, 150,000 that you'll be paying more in those 5 years. But you'll obviously, you know, it's, yeah. So I don't know. I would go 5. But I like to get things paid off fast, but if we can't, we can't.
Does the committee have any comments? Mr. Hess.
I'll make the motion that we follow the recommendation of the sheriff for the 5-year plan.
Is there a second to that motion? Mr. Burns seconds the motion.
Question.
Discussion. Mr. Wheeler.
Thank you. I think that I would agree. I just would like to see if Mr. McCarty's still in the room and see if that fits within our cash flow plan.
Mr. McCarty is in the room.
And I would add just one more thing to consider when you're thinking about this. Motorola has done, because this is a county-wide deal, including fire, police, again, our departments, the coroner, the probation office, animal control. These radios, if you look at these cost sheets and the cost for the radio, the price of a radio, of a portable radio, is $3,026. Because of the mass purchase, those radios are $1,500, so virtually half price. So these prices, I believe, are good through May of 2020, if I'm not mistaken. After May of 2020, this $565,000 purchase becomes 1 million, well, multiply it by 2. So.
Mr. McCarty, did you want to respond to the question from the chairman?
What's that?
Yeah,
Just save that for software.
Yeah.
Yeah.
Sheriff, were you referring to option 1 or option 3 when you 5 years?
I think we're having a little hard time hearing you, at least I am.
I think we were referring to option 3, which is make the first payment. Otherwise, you're paying over the course of those 5 years, you're paying another 30 grand.
Then, yeah, I was thinking option 3 as well. Just one quick question to make sure we got everything covered. We got another options to make sure we cover like bid requirements and stuff or is this a specialty thing?
This is okay. Yeah, this is
okay. Just wanted
done.
To make sure
yes,
we covered all of
yeah, it's done by all the municipalities in town.
Yeah, okay.
They're getting this. Everybody's getting the same price. This has been vetted pretty good.
Other questions? Ms. Weber.
I just had a quick question of how many. Is it 70? Is it 82 or
So those are two different radios.
Okay.
One is mobiles, which go in the cars, and the portables are the ones they carry. So it's both. Both numbers are accurate.
152 then?
Yes.
And then all the accessories?
Yes.
Other questions? Are we ready for a vote? Mr. Chairman?
I do have one question. So does the money have to be paid upon receipt, or do we pay that when it's ordered? I haven't read this part, so I didn't know if you do that.
I'm saying upon contract execution.
Okay. We should be fine.
Yeah, okay.
Are we ready for a motion or a vote? This would be a roll call vote.
Mr. Lear?
Aye.
Mr. Lejes?
Aye.
Mr. Olthoff?
Aye.
Mr. Hess?
Aye.
Mr. Byrne?
Aye.
Ms. Weber? Mr. Payton?
Aye.
Mr. Kinzinger?
Aye.
Mr. Zenz?
Aye.
Ms. Haas? Mr. Swanson?
Aye.
Ms. DeColo? Mr. Dennell? Mr. Wheeler?
Aye.
Motion carries.
All right, we move to
The last thing on my
declaration
agenda is the declaration of surplus vehicles. Do they have those?
Yes.
You do have those. So we have a 1996 Ford Crown Vic, 1998 Chevy S10, and a 2002 GMC Envoy that have been seized through criminal activity. They have all gone through the process through the courts and are ready to be declared surplus and sent down to Clinton to the auction.
We need a motion to for declaration of surplus. Mr. Lejes, Mr. Swanson for a second. Any discussion? Hearing no discussion, this is again a roll call vote.
Mr. Lear?
Aye.
Mr. Lejes?
Aye.
Mr. Olthoff? Mr. Hess?
Aye.
Mr. Byrne?
Aye.
Ms. Weber? Mr. Payton?
Aye.
Mr. Kinzinger?
Aye.
Mr. Zenz?
Aye.
Ms. Haas? Mr. Swanson?
Aye.
Ms. DeColo? Mr. Dennell? Mr. Wheeler?
Aye.
Motion carries.
Is there anything else for the sheriff? All right, Mr. Chairman.
Thank you, Mr. Chairman. Sheriff, is one of your people gonna call the auto parts place and say that we're deducting the tax to let them know to adjust their billing, or how's this? Do we need to call them on the claim for the sales
Oh, yeah,
tax?
yeah, we will.
You guys are gonna
We
call?
will take care of that.
Okay.
We will submit another form.
Okay, I just want to make sure, because the
Yep.
check will be cut less. I just want to make
Right.
sure they don't keep billing us
They,
for the
yeah,
tax.
it's a non-issue.
Okay, thank you.
Thank you. I had one more thing, but actually, I got an email now. I have two more things. While I was sitting back there watching Steve gloat about everything going good. So, right now, for those of you that don't know, we have added a security officer at the Annex Building, which houses probation and the public defender's office. This is certainly a manpower issue for us. The cost to call overtime for us to put an individual down there is about $53 an hour. which throughout the year is about $110,000 if you do standard math of 2,080 hours times that 53. The cost of an additional deputy with benefits and everything is about $90,000. But we want to make you aware that we are going to have a person down there every day, Monday through Friday, and that will have an impact on our patrol budget. So just making you aware. And the last thing, I got an email as I was sitting back there regarding the new recreational medical marijuana, or not medical marijuana, the new recreational marijuana bill that was filed last night after 9 p.m. It's 610 pages. And apparently they have till Friday to vote on it. It's still not good. We will continue to look into it, but unfortunately, as most of you in here know, this thing is going to get crammed down our throats and will have an impact on everybody in the state of Illinois that will be almost unfathomable. But that's what our governor wants to do. So just a heads up.
Mr. Alcoff.
With regard to that, is there anything going on in the facility behind the jail that's supposed to be producing?
Facility behind the jail. Yeah, I mean, there's 2 or 3 cars there, but I don't know. I don't know what's going on inside. It's city's jurisdiction, so.
Okay, I just had that question asked because nobody saw any cars.
Yeah, there's normally 1 or 2 cars there. It's not a big operation.
Okay, thank you.
Mm-hmm.
I did forget about this. You know, when we're doing the group hug stuff, we forgot a couple of people, I think. All of our labor partners came to the table and we all worked together to get longer term agreements. That we talked about employees, but that's a big deal. They realized what a spot we were in and we were all in together. And I don't know if that happens like it happened here. We got like 7 agreements done, I think, in a matter of a couple of months, and everybody kind of went with the same deal. That was unique. And then, you know, we did some things here on the board level. You guys do some things out on your end of town too, and we appreciate all that you guys do in the sheriff's department, because other counties don't have revenue lines on, you know, beyond citations. It's just a cost of the county. We're more than recouping our costs, and it's not unnoticed. We appreciate that. So
thank you.
The other thing I would mention is that with added locals, there's added cost. So I would caution the board not to look at just the cost, the expense side of corrections, and attribute that to just that side of things. Because we're at, I won't say historic highs, but recent history, we're at highs on local populations.
Yes, we're highs.
And so that's just money that is absorbed by the budget. I would expect that hopefully to start to go down when people figure out that we are actually prosecuting everybody who's committing crimes these days. And there's no free pass on that stuff. So again, thanks for all your work. I appreciate it.
Well, and I appreciate that, but that's, you know, we got a great staff, and that's who gets the credit. That's who deserves the credit. Yeah. But the one thing to remember, and the surprising part for all of us, was when they passed bond reform, we thought, well, that's going to reduce all of our local inmates, and it hasn't. I mean, it really hasn't, and that's a surprise to us. I mean, it was a big surprise to us. So. Yeah, the ones we have, and as I've told this committee and the Criminal Justice Committee before, we work with the state's attorney weekly about trying to get the people who don't belong in jail out of jail, because that's obviously the goal of, you know, any new crime bills you see. I mean, we don't want people staying in jail if they don't have to be. And you look at some of these people we're housing, and I mean, they're right where they belong. So.
Thank you.
Thank you.
Number 8, we've got Circuit Clerk FY19 budget request.
Good morning.
Good morning.
So at the Criminal Justice Committee meeting the other day, I talked about how... Thank you. The other day at the Criminal Justice Committee meeting, I talked about how my office is having a hard time keeping up with the work that we have. And so I did some historical research, and I also came up with an idea. So let me just give you a little bit of the history. In 2009, we had 50 employees, which were comprising 44 full-time and 6 part-time, and that included the chief deputy and the circuit clerk. Through attrition, we now have 36 full-time and 0 part-time, and that still includes the chief deputy and the circuit clerk. In 2009, there were 3 minute clerks fully dedicated to the traffic division. Now there are only 2, and we have 2 courtrooms. In 2009, there were 4 floater minute clerks and a supervisor. Now there are 3 because of the recently added position that I was able to get through the new budget increase that you allowed me to have the 2 extra people. In 2009, there were 16 clerical assistants. Now there are 11. There were 6 part-time employees and 1 senior that were able, the senior, that was a thing through the city, I think. I'm not sure how we had her. She was there before I became clerk. But anyway, we had 6 part-time employees and 1 senior who were able to do the work that the 11 clerical assistants, supervisors, chief deputy, and I now have assumed. The felony courtroom minute clerks are right around 2 months behind. The traffic court minute clerks are also about 2 months behind. And in the traffic court specifically, dispositions are supposed to be sent to the Secretary of State within 5 days, and that doesn't happen in our world. The small claims court minute clerk is new. She started in February. She's done a really good job learning the position quickly, so she's doing well keeping up with that high volume courtroom as well. One of the things that I thought about when I was going through this historical thing, we had, what else did I want to tell you about that? In the collections division, at one time we had a supervisor and 2 collections specialists, and a couple of the clerical assistants were like in that department. Well, then we've gotten Harrison Harris to do most of it, and we quit having a court, a collections court. Well, now since we have a new state's attorney, we have another collections court again, so that causes another clerk to go to court. And with all of the attrition and the promotions that I did with the other clerk, I filled the administrative assistant to the chief deputy, so I lost a collections specialist. Well, we really need to have another collections specialist moved into that position. And I have someone that I would like to promote into that position who does some of the collection work, but she also does main work in the main office. So what I would like to do is promote her to the collection specialist, which right now she makes $14.88 an hour, which with the increase she would get a whole 13 cents raise per hour. And then I would like to cover what the other half of her job with a part-time employee, and I was going to start that person at $11 an hour at 20 hours a week, so it would be about $220 a week, or less than $1,000 for the remainder of this budget period. So that's all I'm really asking for, is a half a person. I do, you know, we finally hope that we've hired the last one to hopefully stop the musical chairs that we've had with all of the positions lately. We had 1 minute clerk that left after 3 weeks because it was more work than she expected, so we've hired another one. Then we had another one in the main office who left after 2 weeks because it was not the job she expected to have. So that's the most recent hire I have yesterday. So right now, knock on wood, I have everything back together again. But now we're still reeling. So anyway, that's my request for now.
What's the committee's pleasure? Mr. Altoff?
Motion to approve.
Mr. Zen seconds the motion. Is there discussion on the motion to approve? Mr. Wheeler?
Thank you. This is for a part-time?
Correct.
How does the collective bargain agreements address part-time employees?
Well, I have that right here. I don't think they have to become a member. They've never traditionally been a member.
So there, you said there have been part-time employees in the past, and they
6.
They didn't grieve that?
Oh, no.
Okay.
No.
How long ago was that?
2009
2009.
was whenever we had the big cut, that's when I started letting them go because I couldn't afford to keep them and then lose other employees that had families, you know, that were full-time employees. I didn't think that was right. So I kept as many full-time employees as I could.
Mr. Byrne?
Thank you, Mr. Chairman. Sandy, at criminal justice, you had mentioned that there are times where you have 5 employees off in one day.
Mhm.
Is there a way to rectify it? Seems having staffing problems, that seems like it's I mean, is there a way to control that? I mean, you need bodies, and is there a way to control that kind of where, hey, we get it, you need a day off, but you need to draw a line?
Well, that's true. But with 36 employees, that's not, you know, I mean, that's 5 people. I mean, there have
That's a
been,
decent percentage, though, when you think about it.
Well, I
You're down
understand.
to where you need, you know, here you are asking, you're telling us that you're really strapped.
but if somebody
5
has the
people
flu,
out.
what do you do? You know, I mean, and we've had times when we've had to call people back in actually because or denied vacation requests. We do that.
Yeah.
But when people call off sick, I mean, there's not much that you can do about it. And whenever Brian Gadbois had been talking a couple years ago about, you know, in the bargaining agreements, they kept offering more time as a benefit rather than pay. And even he was saying, you know, there's a point where you got to draw the line because we can't afford to let all those people off. You know, I mean, I only have 3 people that can go to court when out of 10 courtrooms somebody might not be there, and then those that they don't get the time at their desk, that's why they're 2 months behind, because they're in court 4 days a week. They get their 1 day out, but that 1 day out is not enough to get all their backlog done. I mean, the girls in the office have said, I do have a gentleman, but the ladies that I was talking with the other day, you know, they said we'd like somebody to come and walk in our shoes for a day to see how it is, because there's just so many things that come up. And, you know, I had to take one girl off of her desk day to go to court because we ran out of clerks. We had specialty courts. We have sometimes out of county judges in the courtroom that we have to supply a clerk to as well. And so I almost went to court to do the custodies, but I found somebody that was able to go, and we had so many custodies that day that she was out of court for 2 hours, or I mean she was in court for 2 hours, so that took 2 hours away from her desk to do the court hearing for the in custodies.
And
So
no one's denying their job's difficult and time consuming, but that circles back to my question in criminal justice, and you bring in on a part-time people that could do the clerical stuff, sort of the day-to-day stuff that they could probably not have to deal with. That's just, you know, copying stuff, and bringing on those type of people that can maybe, you know, retirees looking for a little supplemental income.
Correct.
And as long as the collective bargaining unit agrees, that would be a nice way to maybe have flex staffing.
Right.
And that would absorb a lot of your time.
Right, and we would appreciate that. That's why I'm only asking for one right now, and I'm doing it the conservative way. I just want to take one at a time and see how it goes. We're praying that once we get the civil e-filing integration completed, that will alleviate some of the work that we have. That's why I only really want to ask for one right now. That we're hoping will be ready to go in July, and with the new advent of the new fee and assessment structure. So it's just it's a big balancing act, but thank you.
Are we ready for a vote? If we're ready for a vote, this does require spending money, so we'll need a roll call. Yes.
And promoting one with a 3% raise.
We're voting on authorizing you to promote somebody?
To a,
I don't know that that's appropriate. That's your call. We're the ones who are voting on the part.
okay.
Microphone.
I'm sorry.
Needs to be on the record. I don't think that that's appropriate to vote on a decision that's made in your department as far as promotions.
Okay.
We should vote on the part-time, because that
part-time.
is expansion of the budget that we're looking at.
Right.
So, is that the motion? Okay, thank you.
All right. Second degree. All right. Roll call, please.
Mr. Lear,
Aye.
Mr. Lejes, Mr. Oltoff, Mr. Hess, Mr. Byrne, Ms. Weber, Mr. Payton, Mr. Kinzinger, Mr. Zenz, Ms. Haas, Mr. Swanson, Ms. DeColo, Mr. Dennell, Mr. Wheeler. Motion carries.
Thank you very much.
Thank you very much. The auditor's office, Mr. Lee. The monthly claims have been sent to the members of the committee. Motion would be in order. Ms. Weber, a motion to approve monthly claims. Mr. Payton, a second. Let's have any discussion on the claims. Good morning.
Good morning, Mr. Chairman. Good morning, committee.
I have one question. I noticed there was a big jump in the special claim or special funds claims. Did your report indicate any reason why that, or did you have any way of knowing why that jump occurred? I'm sorry. There was a big jump in the special funds claims. As I saw it, I think it's almost a $3 million jump. I didn't know whether you know a reason for that or whether that would come from some other source.
Excellent question, Mr. Chairman. So from what I could gather, that was basically from ETSB. There were some transfers that had taken place, and all of those transfers show up in the claims report. Not sure of the details behind them or the authorization or anything like that. That doesn't flow through our office, and that's part of the reason we put our disclaimer on the report as well.
Any other questions on the report? Then we'll have a roll call, please.
Mr. Lear,
Aye.
Mr. Lejes, Mr. Oltoff, Mr. Hess, Mr. Byrne, Ms. Weber, Mr. Payton, Mr. Kinzinger, Mr. Zenz, Ms. Haas, Mr. Swanson, Ms. DeColo, Mr. Dennell, Mr. Wheeler. Motion carries.
Do you have any thing for the committee, Mr. Lee?
Not really. Unless there's any questions of me, I'd be more than happy to entertain them.
Mr. Byrne.
Thank you, Mr. Chairman. Jake, how are you?
Good, sir. How are you?
Good. I got a question. I piggybacking on Mr. Zenz asked you last month inquired about the number of audits done. And I had questions from constituents asking, what exactly does the audit entail? How do you select what do you audit? How long does an audit take? We had the external auditors here earlier talking about two departments that had concerns. Are those areas that you would be looking at as well? Are there red flags that come up that you see where that's a department I need to look at, or a line item in a budget or something? How does the process work in an audit? From how do you identify what the audit? Is there something you look for? Do you randomly just pick? How long does an audit take?
Excellent question, Mr. Byrne. So they vary by what we're looking for. There are various levels of audit. Now, the audit that the external auditors do, that is an attestation function. And so there's a different level of procedures that are involved with that. I would say the first thing we do is obviously we look at what we're required to do by statute, and we look at the resources that we have in terms of time between myself and the one other employee in the office. And that is where we make our determination. As we know, we do have ongoing statutory violations, so the systemic functions procedurally are all risk areas as far as we're concerned. And so, anything that comes up throughout that process, tends to be a red flag, so to say. I will go on to say, as far as the how long they take, they vary by what we're doing. If we're just testing for process, whether or not credit card receipts are accompany the charge, that's a process thing, that's administrative, so that's not going to take very long. You're testing existence and completeness, for example, in terms of assertions, but it is it's one of those things that we have done more than, as far as we can tell, the office has done ever. And, you know, we do what we can with what we have.
Okay.
Any other questions for Mr. Lee? Hearing none, thank you very much.
Thank you, Mr. Chairman. Have a good day, everyone.
We have one item under other business. Mr. Chairman, would you want to speak to that?
Sure. The Convention and Visitors Bureau, we approved the intergovernmental agreement, which is basically where all municipalities agree to forego their own collecting of a hotel motel tax, so the county could levy that at 5% and then distribute that money to the CVB. Since they have modified or are having the municipalities have the option to modify the agreement, so they could, the municipalities or county government, as it were to receive a rebate of 1% back to that entity. That offer was to all members that contribute funds to the CVB that are municipal governments. So this paperwork that you see in front of you is what I am asking the county board to do is to opt out of the 1% coming back to us. It's roughly $800, and I personally, and I think a lot of people would agree, and have told me that that money's better spent in the hands of professionals to pool that money to support the attraction of visitors to the area and to continue their mission in the manner that they currently do business. So that is why it appears on the agenda as that, is to allow me to sign the opt-out clause of receiving a rebate.
Is there a motion in regard to this then? Mr. Kissinger and Mr. Jess seconds. A discussion on the motion. Mr. Jess?
I agree with Andy. From what's going on in Bradley and their lack of foresight, I think that we need to do all we can to promote. Thank you.
Any other discussion? Mr. Olthoff?
Did you mention what that amount came to?
I believe it's about $800.
Oh, never mind.
Yeah.
All right, this is a roll call vote.
Mr. Lear?
Aye.
Mr. Lejes? Aye. Mr. Olthoff? Aye. Mr. Hess?
Aye.
Mr. Byrne?
Aye.
Mr. Payton?
Aye.
Mr. Kinzinger?
Aye.
Mr. Zenz? Ms. Haas? Mr. Swanson?
Aye.
Ms. DeColo? Mr. Dennell? Mr. Wheeler?
Aye.
Motion carries.
Is there any old business come before the committee? Is there any new business come before the committee? Mr. Jess? Mr. Hess? And a second. All in favor say aye. Aye. Opposed, nay. Motion carries.